this special presentation on examination answering techniques for advanced financial reporting CA 3.1. I am your presenter, Boniface Musonda. Presentation content, it will cover 6 areas: introduction, general competencies, main command words, most common mistakes, practical examination questions. Finally, conclusion. Introduction. The objective of the presentation is to orient you on the examination answering techniques in order to make you well equipped to answer future examinations. It has been noted that the performance of students has been bad. Therefore, ZIC has decided to come up with this special presentation. Students can possess all necessary knowledge and yet fail an exam. Fact: pass rate is not regulated by Zika. It's determined by students. There is misconception that Zika is the one who regulates the pass rate. Overall performance of cadets. If you check, like March 2022, the lowest mark was 1%. Honestly, how can you get 1% out of 100%? It means students are lacking examination techniques. In March 2023, the overall pass rate was 10%. That's why Zika is worried, and they want to see how they can enhance the performance. So you can agree from this presentation that the pass rate is not regulated by Zika, rather it's regulated by students. General competencies. In CA 3.1, cadets are tested on the understanding, application, and ability to apply accounting principles when preparing the financial statement, which must comply with the generally accepted accounting practice. Evaluate the position, performance, and prospects of the entities from their financial statement and other non-financial information. Mostly this one is the last question in your paper, which will be question 5. So the forthcoming exam, expect the last question to be on ratio analysis. Explain the ethical issues arising in preparation of financial statement and recommend appropriate course of action. As an accountant, as you'll be discharging your work, you'll be coming across ethical issues. Therefore, you're expecting to know the ethical issues. You're expecting to know the code of ethics. Also, how to recommend an appropriate course of action. Syllabus. It's very important to know your syllabus because this will guide you where to concentrate. As you can see, the first part, it covers select and communicate appropriate accounting policies, 20%. Prepare financial statement using IFRS and other relevant standards, 50%. Therefore, if you have to perform well in the forthcoming exams, you must ensure that you are comfortable with consolidation because it will be the first question and it will carry 40 marks. Another area in your syllabus is analyze, interpret, and evaluate the financial and non-financial information of entities. Most of this is question 5 and part of question 1. Respond to ethical issues arising in the preparation and use of financial and non-financial information. You must ensure that you understand non-financial information, such as management commentary, integrated reporting, environmental and social reporting. I examined areas or items. Group financial statement will be question 1. So you must ensure that you understand consolidated financial statement. Ethical issues, conceptual framework, 2018. And non-financial reporting. Conceptual framework is highly examined. You must ensure that you understand the chapters. There are 8 chapters. And also, you must ensure that you know advantages, disadvantages, and the purpose of the conceptual framework. Financial analysis will be question 5, ratios. Other important areas in terms of the standards, financial instruments is highly examined, mostly IFRS 9. You must ensure that you understand IFRS 9 in terms of recognition, measurement, classification, derecognition. And the most highly important, highly technical area in IFRS 9 is age accounting and impairment. Employee benefits, highly examined. You must know the types of the employee benefits and the accounting treatment. Share-based payment, IFRS 2. Ensure that you know the types of the share-based payment, equity settled, cash settled, and where there's a choice. Levied from contract with customer. This is an important area. It's an entertainment area for the examiner. You can't pass CA 3.1 without understanding IFRS 15. What are the key areas which you must ensure that you understand under IFRS 15? You must know the 5 steps which must be followed before you can recognize revenue. Further, you must know also what will constitute a valid contract. Fair value measurement, IFRS 13, it's highly examined. You must know the definition of the fair value, the types of the market, and how to account for the transaction cost and transport cost. Leases, highly examined. In CA 2.1, you were tested on how to account for leases in the books of the lessor and the lessee. At this level, you must ensure that you pay particular attention and understanding how to account for sale and leaseback. Very, very important, highly examined standard. It's a new standard, therefore expect you to come across it in the exam. Income taxes, IAS 12. In financial reporting, you covered current tax. At this level, you have to spend time how to account for deferred tax. You have to know what's the meaning of deferred tax, which is a tax on temporary difference. And when you talk about temporary difference, you must know that we have got 2 types of temporal difference. We have got a taxable temporal difference and deductible temporal difference. Further, you must understand that the requirement of IAS 12, when you're accounting for deferred tax, you have to use full provision. Apart from that, when you are accounting for deferred tax asset, only account for deferred tax asset if it's probable that the entity will make enough taxable profit in future. Key standards on consolidation, IFRS 3, business combination. You must ensure that you understand how to account for transaction cost. What are the 2 methods of valuing NCI, and how do we account for the negative and the positive goodwill? IFRS 10 is consolidation. How do we consolidate a subsidiary? We use full consolidation. Unfortunately, at this level, you find some students, they are still using equity accounting and proportionate accounting. IAS 7, consolidated cash flow. What will come at advanced financial reporting is cash flow for the group, not for a single entity. IAS 21, the effect of changes in the foreign exchange rate. You may be given a foreign subsidiary which will require you to translate. Non-current asset, highly examined. There will be no exam where there will be no IAS 16, which is property, plant, and equipment. It's highly examined standard, but most students, they have neglected IAS 16. You must know, most at this level, how to account for subsequent measurement. When there is a revaluation gain, when there is a revaluation loss, whether to report in profit or loss or to report in other comprehensive income. You are guided and advised to ensure that you understand the requirement. IAS 23, which is on borrowing cost. You must know the definition of the borrowing cost. Apart from that, when should you commence capitalization? When should you cease? When should you suspend? And how do we account for the weighted average borrowing cost? Later on, I'll share one question which came in March 2023 where they tested on IAS 23 and the performance was below average. IAS 38, which is on intangible asset. This is highly examined also standard. You must ensure that you know the definition of intangible asset and what are the recognition criteria. There's a mnemonic you can use, PIRATE, which stands for it should be probable that the entity will receive economic benefit, intention to complete a project, technically feasible, and also the expenditure can be measured reliably. IAS 36 impairment, you must ensure that you understand impairment is highly examined, and most at CA 3.1, you'll be tested how to account for impairment for a subsidiary. So therefore, you are advised to revise how to account for impairment on a cash generating unit. IAS 41, investment property. This is also highly examined standard. there are two areas which the examiner like on IS 41, where to report the gains or losses. You must know that the gain or losses, when you are using the fair value, always must be reported in the statement of profit or loss. Apart from that, when you are using a fair value model, there is no depreciation. IS 41, which is the last IS, which is on agriculture. You must know and distinguish between the biological asset and the agricultural produce, highly examined. Provision, IS 37, highly examined. At this level, you are not expected to be asked to define what is provision. There will be a scenario where they want you to apply. Take note, this is advisory level. It's not a knowledge level. Therefore, you are expected to apply. They will give you a general scenario. Then from there, you must apply the given standard. In terms of reporting financial performance, IS2, at this level, you are not expected to test you how to calculate the cost. The only area which will be tested in the exam, if IS2 will come, is how do we determine the value of the inventory? How do we measure inventory? We measure always at a lower of cost and net realizable value. IS8, accounting policies, estimate and errors, is also highly examined. So you must know the definition of each item, an accounting policy, estimate, errors. You must also know the examples and also the accounting treatment. For instance, change in accounting estimate. How do we account for it? We account for it prospectively. When you are collecting a prior period errors, we adjust retrospectively. In terms of IS10, highly examine events after the reporting period. You must know what's the meaning when say adjusting event, non-adjusting event, and the examples. IS20, highly examine, which is accounting for government grant and disclosure of the government assistance. The key thing, when you are accounting for the grant, you have to know, is it a grant related to asset or is it a grant related to income? IS21, in financial reporting, you were tested how to apply IS21 at an individual stage where you have got foreign transactions. At this level, you'll be given a foreign subsidiary. Therefore, you'll be required to translate. The example, you may have Dangote Zambia, Dangote Nigeria, which they are using different currencies. So before you can aggregate, you have to know the rules how to translate. IS33 is earnings per share, highly examined. You must know how to compute weighted average number of shares. Also, what happens when there's a change in capital structure? IFRS 1, first time adoption. What are you expecting to be tested in the exam? If, let's say, a Zambian-based company, they were using other accounting standards. Now they want to start using international accounting standards. What are they supposed to put in place before they can adopt the IFRSs? Of course, they have to ensure that they have competent staff who will be able to apply the standard. Apart from that, they must also ensure there's a plan for adoption. Otherwise, they will fail to implement. Also, they have to conduct what we call impact assessment. What will be the impact when the new standards are adopted? Because what will happen when you adopt IFRSs, some elements will be recognized, others will be derecognized. IFRS 5, highly examined, which is non-current asset held for sale and discontinued operation. So you must know the definition of non-current asset held for sale and discontinued operation. From the past exams, what has been noted is that students only understand non-current asset held for sale. They have neglected the discontinued operation. Therefore, you are advised for future exams that you must understand the discontinued operations. IFRS 8, which is on operating segment. This is a friendly standard. If it will come in the exam, I always encourage my students to go for it, because normally there are only 3 areas which will be tested. The first one, you have to know the definition of an operating segment. Then you have to know a reportable segment. Then also in terms of aggregation criteria. So these are the key areas which you must ensure that before you can even enter for the exams, you must prepare for yourself. Main command words. common verbs used. Understanding the command word or verb is key to producing a correct answer. Please pay attention to the verb, what the examiner requires you to do. What are some of the common command words? Calculate. In the exam, you can be asked, calculate a goodwill. You simply calculate. There will be computation. Explain. You have to make clear to someone by describing it in more detail and revealing relevant facts. For instance, you can be asked, explain the recognition criteria of financial instrument. You are not only supposed to list. From the past exam, the common mistakes I've noted from students, most on IFRS 15, students will be asked to explain the 5 steps involved when recognizing level. Students simply list. At this level, you cannot be asked to list, where you simply list, identify the contract with customer, identify the performance obligation. That is for financial reporting, not advanced financial reporting. Also, you can be asked to advise. When you say advise, you are expecting to counsel or inform or notify. You may be also asked to recommend. The last question, which is on ratio analysis. After you have computed ratios, what are you expected in the exam is to recommend an appropriate course of action which management have to take. Evaluate, most also will come as part of the ratio analysis. Describe, you give detailed account for something. You have to communicate the key features. For instance, you can be asked under IFRS 16 on leases to describe the lease in detail or sell and lease back. So you are once more reminded that before you can answer any question in the exam, always start with the requirement. Now, I've noted this, from the past experience, students will start answering before going to the requirement. Why is it important first to start with the requirement? You must know the command words, what the examiner is instructing you to undertake. So this is very, very important. The next, we'll discuss the common mistake exhibited by students. It's unfortunately, each sitting, Zika publish examination comments from the students. However, it has been noted that there are only a few students who takes time to read the mistakes. Take note, you learn from the mistakes from others. So I'll try to highlight a detailed document. You can download it on the Zika website. So I'll simply try to highlight some of the common mistakes from the past exams. We'll start with question 1, March 2022. Question 1 was on a D-shaped structure. Student had challenged to compute the effective interest in the subsidiary. So what we're expecting in this question, the parent acquired 60% in the subsidiary, then subsidiary acquired 70% in the sub-subsidiary. So what the examiner expected is the student to multiply 60% times 70%, then also to add the direct investment of 14% in order to come up with the effective interest of 56%. Now, where do we use this effective interest rate? You have to use it when you come to share the post-equity. Also, we use it when we'll be computing goodwill. So if the effective interest is 56%, therefore it means the balance will be for the non-controlling interest. So therefore, what am I advising you? Ensure that you know how to compute the effective interest. Another common mistake, almost each and every examiner's comment is on how to account for non-current assets. The common mistake, students only write the total figure. Take note, in case you miss one adjustment, then the entire marks, you will lose them. I'm going to demonstrate when we go to the practical examination techniques, the meaning. Because for every entry, for the Zika exam, you'll be given half mark. Apart from that, when you come to the share capital, take note, we only consolidate, we only get the share capital of the parent company. It's unfortunate that even at advanced financial reporting, most students, they are also adding the share capital of the subsidiary. No matter how difficult or complicated the question will be in the exam, always you pick the share capital of the parent company. The only time we are going to adjust the share capital if there was a share exchange where the parent acquired a subsidiary and those shares were not accounted for. That's the only time you are expecting to adjust the share capital. I'll repeat, this is a common mistake. Whenever you come across a question which will require you to consolidate the statement of financial position, only pick the share capital of the parent. Another common mistake is to use a proportionate consolidation. I don't know where even students get this mistake from. When you are consolidating a subsidiary, we use full consolidation. What's the meaning when say full consolidation? You simply aggregate the results of the parent and subsidiary, irrespective of the percentage of ownership. What's the meaning of that? Let's assume the parent acquired 80%. So when you are consolidating, the common mistake is when you want to get the results of the subsidiary in terms of assets and liability, you start getting 80%. That is wrong. You are supposed to use the full consolidation. Take note also, the common mistake I've noted is where the assets and liability are proportionate. Take note, for assets and liability, you simply consider the assets and liability at a year end. There is no time apportionment. If there will be issue of time apportionment, what's the meaning of that? Let's assume a parent acquired a subsidiary for only 9 months. The common mistake is when you come to assets and liability, you start multiplying 9 over 12. That is wrong. We are not expecting that at this level. So these are some of the common mistakes which were noted. As I've indicated, this document is available at the Zika website. Question 2, March 2021. It was poorly attempted by candidates. That's the selected question as they could hardly calculate the weighted average number of shares. Remember, I highlighted, when you are computing earnings per share under IAS 33, we use weighted average number of shares, not actual number of shares. So when this question came, most students picked the actual number of shares instead of computing the weighted average number of shares because there was a change in the capital structure. Another common mistake, when you are computing earnings per share, most at advanced financial reporting, the earnings per share which will come is for the group. When say the group, there will be share for the parent and non-controlling interest. So the profit or loss which you must pick is the profit or loss attributable to the equity of the parent. So if you check here, what was pointed out by the markers, the cadet generally use the total loss instead of the equity attributable to the parent. Question 3 of March 2022. What was noted there, part of the requirement was on non-financial reporting. Most students did not answer this part. You are reminded that non-financial reporting is part of your syllabus. You must ensure that you revise environmental reporting, sustainability reporting, integrated reporting. Also, they tested on conceptual framework. Now, you may ask, why March 2018, but we are in 2023? It means that's the last time when this document was revised. And this is highly examined, and it was tested. I think they have tested more than 4 times when the new document was revised. Therefore, you are advised to ensure that you read March 2018. What was tested there was on qualitative characteristics of financial information. Unfortunately, most students did not attempt this. Also, what was tested, IAS 16 and IAS 40, what was pointed out by the examiner failed to discuss the potential impact of the main accounting policies permitted by IAS 16 and IAS 40. You agree with me? For subsequent measurement, IAS 16 allows you can use a cost model or you can use a revaluation model. IAS 20, when you are presenting the capital grant, you can net off or you can use a different method. So what was tested is to discuss what are the benefits and what are the limitations of having alternative treatment. Presentation, at this level normally you are given professional marks. Therefore, you are encouraged to ensure that as you are presenting, you must ensure that you follow the appropriate guidance. March 2022, question 4. What was tested is on IFRS 15. I remind you that you must ensure that you understand IFRS 15. So what was tested here, they paid in advance for the food packs. Now take note, according to IFRS 15, you can only recognize revenue when a performance condition has been satisfied, not when you have paid in advance. So this is very important. Most candidates fail to appreciate the fact that revenue could not be recognized on the units of the food packs not yet delivered, as control had not yet moved to the buyer, and hence explain wrongly that revenue on all packs needs to be recognized. So basically, what was tested here, the revenue what should have been only recognized is in respect of what the food packs which were delivered. If you have paid for something, then the entity has not provided the service or goods that should be accounted for as deferred income. Further, part C, required candidates to state the two conditions to be present in order to present results as discontinued operation. I mentioned earlier on that IFRS 5 covers two areas, non-current asset held for sale and discontinued operation. So what was tested in this question was on discontinued operation, but most of students answered on non-current asset held for sale. Therefore, they lost marks. So it's very important to ensure that you understand what you are required. Also, question 5 of March 2022, what was tested there was on management commentary. Ensure that you understand the management commentary. What we are trying to appreciate, apart from preparing financial statement, let's get the views from management, because management are the one who understand the business. So they'll be able to communicate why in the past they performed like that, why are they performing like that, and what have they planned for. So this is very important. Apart from the determining that the company made a profit or loss, let's get the views from management. Question 1, June 2022. Question 1, part A, it was on corporate and social responsibility. We are reminding you, most of you will be the finance directors. Apart from making profit, you are there to support the community. Then the last part, it was on cash flow. Unfortunately, the performance was not good. What were some of the areas? As I've indicated, these examiners' comments are available on the Zika website. I'll simply highlight some of the key mistakes which were noted. First one, subtracted the share of the associate loss. This should have been added, reversed to the profit after tax. When you are preparing cash flow using indirect method, you start adjusting the profit. Now, those items which were, let's assume the items were added in the income statement. When you are preparing statement of cash flow, you have to reverse, you have to subtract. So the example, share of the loss from the associate, it's an expense. So it means it was debited in the income statement. It was subtracted. So what we are expected is to add back. Apart from that, there were actual gains. I'm sure you know IS 19. You can't go for the exam without studying IS 19. Actual gains or losses are reported in other comprehensive income. Therefore, we are not expecting you to reverse in profit or loss. This is a common mistake. Apart from that, some students, they started with the profit after tax. Take note, you encouraged or you are advised to start with the profit before tax. When you say profit before tax, is before you subtract the tax. However, in case you start with the profit after tax, what are you supposed to do? You have to add back the tax expense. Otherwise, you lose 1 mark. Further, in terms of taxation, whenever taxation will come IS 12 at advanced financial reporting at advisory level, there will be 2 types of tax. There will be a current tax and fair tax. So the common mistake is where you are going to ignore the deferred tax. Apart from that, swapped the balances brought forward and balances carried forward. This is the common mistake. What's the meaning of that? You may be given two financial statements for 2022 and 2023. The other way they can start with 2023, 2022. So if you are not careful, you may show the brought forward as a carried forward. Therefore, you lose marks. Therefore, in the exam, I always encourage my student, you tick the current year. Further, few cadets indicated the balance on the long side of a ledger account. This is a common mistake. What's the meaning of this? All of us, assets, opening balance should be on debit side, like property, plant and equipment, inventory, receivable. Unfortunately, even at this level, you find some students are showing open balances on credit balance. Further, liability and equity, the open balances are on credit balance. So once you put on the opposite side, you put on the debit side, you lose marks. My humble appeal to you for future examinations, you are advised to use a narrative if you are not comfortable with a ledger account. Take note, for every correct entry, you are given half mark. So if you swap the debit, you indicate on the credit side, you lose 1 mark. Now, narration, you simply indicate opening balance, you make adjustment, then the closing balance. Take note that both narrative and ledger accounts are acceptable. So to be on the safe side, I would recommend, if you're not comfortable with the ledger account, use the narrative. Misclassification of cash flow items. Take note, at this level, you are expected to know the headings of cash flow. So those who misclassified the cash flow item, they lost 3 marks. Kindly, for the future exams, you are advised to ensure that you revise the format of cash flow. Question 2, June 2022. Failed to conclude that the first transaction was a defined benefit. I indicated earlier on that we have got 2 types of the benefit, defined benefit and defined contribution. Most students had concluded that it was a defined contribution, hence they lost marks. Further, you were tested on share-based payment. When you are accounting for the share-based payment, before the end of the vesting period, we simply estimate how many directors will be entitled. The example, the vesting period can be 4 years. Then the directors are 10 directors. In year 1, 2 directors left the organization. Then we're expecting further 3 directors. So you have to take into account those who have left and those who are expecting to go. So take note of that. Deferred tax implication. This is also a common area where students have not been performing well. My humble appeal, ensure that you revise IS 12 and pay particular attention for deferred tax, because deferred tax can come across or covers almost all areas. For future examination, cadets are advised to study all examinable standards and pay attention to the standards which are only examinable at advisor level. So these are the feedback coming from the examiner, is giving you the direction. IS 19, employee benefit, IFRS 2 share-based payment were not examined at financial reporting. So you are advised to ensure that you pay particular attention and also how to incorporate the deferred tax. Question 3, June 2022. Part A, number 2, students were asked to recommend accounting treatment and showing the financial statement extracts for a given data. We cadets continue on the definition and conditions. So when you have been asked to recommend, we're expecting first you have to do some definition, computation, then you make a recommendation. Very, very important. Further, some students, despite the question, did not require to write a report format. Students were writing a report format. There you lose, or it will cost you in terms of time management, and you won't be given any marks. As that also indicated earlier on, the last point, a common mistake for question 3 for June 2022, instead of showing how the transaction should be accounted for, a number of answers discussed irrelevant criteria for classifying asset as held for sale. So this question basically, students were asked on the discontinued operation, but they were answering on non-current asset held for sale. Question 4, June 2022. It was on age accounting. I pointed earlier on, IFRS 9, there are key 2 areas you must ensure that you are comfortable: impairment on financial assets and age accounting. You must ensure that you understand the purpose of age accounting, what are the 3 types of age accounting, and what is the accounting treatment. Apart from that, the same question, what was noted for transaction 2? Failure to discount amount receivable in future in respect of the delivery of the plant recognized as revenue on delivery plant. According to IFRS 15, revenue from contract with customer, where the time value is material, you are required to discount, and you have to recognize the discounted amount. They are subsequently, then you'll be charging interest. So this what was tested for transaction 2. Number 1 is where the amount to be received in future and the time value was material. So you were expected to discount, and then you subsequently you start charging interest. Failure to show the liability to report in statement of financial position at a reporting date. So when you have been advised to prepare the extract of financial statement, you are not only supposed to compute and advise, you have to demonstrate, you have to indicate how much to be reported in the statement of financial position. Question 5, June 2022. Common mistakes included preparing ratios based on continuing operation only, instead of ratios based on the combined result of the statement of profit or loss and other comprehensive income. So basically, what was pointed out here is student only computed ratios for continuing operation, instead also commenting on combined results. Some candidates either failed to prepare the standard ratios or prepared them on a discontinued operations. At this level, we're expecting to know the standards. You have to know these ratios you are computing, is it concerning performance or is it position? Some candidates may have referred to increase and decreases in absolute figure without clearly stating the impact of the discontinued operation and the contingencies of the financial performance and position of the company. The common answers we come across in the when you are going through the scripts, students will simply say revenue increased, expenses reduced. This is even someone doing the first level will be able to answer. At this level, when you compute ratios, you must use additional information which will be provided to help you to assess the performance and the position. You can't get any mark by simply indicating revenue increased, expenses increased or decreased. So you are kind of advised to analyze is to go detail. Question 1, September 2022. Not showing all the workings. I think I had talked about this. When you are preparing consolidated financial statement, where you have got more than one figure, you are encouraged to show those figures. Marks were lost, especially where the consolidated figures were incorrect. The meaning here, you find there are 3 companies, parent and 2 subsidiaries. Each company has got PPE. Let's assume 10, 15, 25. So for each is half mark. Then you find there's a fair value adjustment of 3/4. So by not showing 3/4, then you simply add the 3 results, then you lose the marks. Share capital. Again, it has come. Please, share capital only pick for the parent. Failed to conduct impairment review on both subsidiaries. At this level, IS36, the way to come is where you are conducting impairment on the subsidiary. Therefore, you must know how to conduct impairment by simply comparing the carrying amount and recoverable amount. Few students measured NCI using the fair value of net asset at acquisition. That's a proportionate or partial method. Despite note 1 and note 4 of the question clearly stated that it's a group policy to initially measure non-controlling interest at fair value. That's why it's important. Before you can start answering any question, you have to go through the requirement. And whatever exam you come across, even for the forthcoming exam, they will give you a method how the company is valuing non-controlling interest. Why? Because there are two methods of valuing NCI. So like for this question, you are required to use a fair value, but students used the proportionate method. Improper treatment of the fair value adjustment for PPE, always there will be fair value adjustment in the exam. Most students fail to account for the reversal of remeasurement gains. So basically it's where in the individual account, they were measuring at fair value, then there were gains which were reported in the separate financial statement, which required to be reversed when you are preparing the group accounts. I'm sure you know, according to IS 27, in the separate financial statement, investment can be accounted for at cost, fair value, or equity accounting. But when you are consolidating a subsidiary, we use IFRS 10. Some candidates were still consolidating pre-acquisition equity items. Take note, pre-equity. We are referring to the equity which was at the date of acquisition. We use it when you are computing goodwill, and the other part, you have to give it to the non-controlling interest. Majority of candidates failed to compute movement on equity arising from the acquisition of additional shares. So there was a disposal and where the company maintained control. So we are supposed to compute the movement in equity. If there is one area which I would encourage you to spend time is changes in group structure. Is the company, when there is a change, have they lost control or have they maintained control? Question 2, September 2022. Clearly, many candidates do not have the sound technical knowledge. So what we're expecting at this level is advisory level, not compute. You must understand the standards. At this level, you are going to have a challenge to pass this paper if you be a master of computation. You must understand the standard. Accounting standard must be on your fingertip. It's like you are a pastor and you don't know any scripture. So here, as an accountant, what we're expecting, you must know the accounting standard. Fall in love. How do you fall in love? Spend quality time. Question 3, September 2022. It was on IFRS 16. Highly examined. It's an entertainment area for the examiner. Candidate's performance on this sale and leaseback transaction was very disappointing. Why? Student, the knowledge which was displayed as if they were answering financial reporting. It was also noted that candidates failed to show how the transaction should be accounted for. A number of students answered irrelevant treatment. So in the exam, if they have asked you to account in the books of the lessor, you must ensure that you account for the lessor. If it's in the books of the lessee, you account for the books in the books of the lessee. Question 4, September 2022. Many candidates were not able to produce the financial statement extracts with the correct amounts and used long discounting rate. So basically, they used 8% to discount instead of 5. Question 5, poor presentation skills. You must ensure that you work on the presentation skills is part of the professional marks which will be awarded in the exam. Failure to identify and compute relevant ratios. The way ratios will come at this advisory level, 1, they will specify the ratios to compute. There, it will be fine for you. The challenge will come where the examiner will simply require you to assess the performance and the position of an entity. So what are you expected to do in the exam in that case? You must ensure that you have to know the ratio you compute. Is it a profitability ratio? Is it a liquidity ratio? Is it a gearing ratio? From my past experience, students are only comfortable with profitability ratio. So it means you are going to lose marks. When they are marking the exams, for instance, they will indicate profitability 3 marks, liquidity 3 marks, gearing 3 marks. So if you are going to compute 8 ratios on profitability, you'll be only awarded 3 marks and you lose 6 marks. For future exams, you are advised to ensure that you know under which category of the ratios you are computing. Very, very important. Question 1, December 2022. Not showing all the workings. Please, for every correct entry for Zika exams, you are given half mark, included the subsidiary share capital. That's why you can agree with me that the examiners simply bring the same questions. What they simply do, maybe they'll simply multiply by 1 or multiply by 2, and you start complaining. I think I've pointed out so far, I think about 3 past exams where they are emphasizing on share capital. Again, you are reminded, only account for the share capital for the parent company. Then what was tested also here is to conduct impairment review on a CGU. In note 6 of the question, cadets were told that the recoverable amount of each subsidiary was determined without consideration of liability. In other words, cadets were given the recoverable amounts of the assets. Take note, when you are conducting impairment, we compare the carrying amount and the recoverable amount. So if the recoverable amount is of assets, then also when you are comparing the recoverable amount, you must compare the carrying amount and the recoverable amount of assets only. Cadets were expected to compare the recoverable amount to the carrying value of each subsidiary asset rather than net assets. What's the meaning when you say net assets? You are referring to total assets minus total liability. So in that case, what you have been advised here, in the exam, you have to pay particular attention. If the recoverable amount will be for the net assets, then come up with the carrying amount of the net asset. If it will be of assets, come up with the carrying amount of assets. Number 4, few students measured NCI using the fair value of net asset at acquisition. That's a proportionate. If you have been following this presentation, I think I also highlighted this one. Why the markers have been writing these comments is to help you. Unfortunately, it seems most of you are not taking advantage of the material on the Zika website. Number 2 of the question clearly stated that it's a group policy to measure non-controlling interest at fair value. No need of being a prophet. Even the exam which will come, they will tell you the method of valuing NCI. Why? Because there are 2 methods. Fair value adjustment, whether you like it or not, the exam you come across, there will be a fair value adjustment at the date of acquisition, which you use when you are computing goodwill. Movement, you take to retained earning. Then at a reporting date, you take to financial position. Question 2, December 2022. Cadets could not describe in technical language accounting for lease in the books of the lessor. Take note, according to IFRS 16, you have to know, are you in the books of the lessor or the lessee? It appeared that cadets focus on accounting for leases in the lessees. I know where their material change is in the how to account for leases in the books of the lessee. But you must not neglect how to account in the books of the lessor. Further, cadets could not correctly calculate initial measurement of a right of use of asset involved, depreciate it before evaluation. So take note of that. You have to know. That's why it's important whenever you are going through the requirement, you have to know what have you been commanded. Is it to compute? Is it to explain? Also take note of the date so that you know, is it after 1 year, 2 years? Apart from that, you have to know who is the reporting entity. Are you prepared for the lessor or are you preparing for the lessee? So you are reminded for future exams, ensure that you revise, sell, and lease back. It's highly examined at this level. Why is it highly examined at this level? CA 2.1 financial reporting, this is not examined. However, you must have the brought forward knowledge in order for you to perform well at advanced financial reporting. Question 3, December 2022. Cadence failed to identify that the question was asking for circumstances where a reporting entity would prepare individual financial statements that were not all complied with the IFRS. I'm sure you know, according to Zika, there's what we call three-tier financial reporting framework, where according to Zika, they have guided, there's what we call IFRS for SMEs, IFRS for Zambian Financial Reporting Standard, and full IFRSs. So you must ensure that you revise the three-tier financial reporting framework. The last comment from the markers, Cadence could not bring out scenario-based evidence for excluding an acquired entity from the consolidation by the parent company, that they produced generic responses. At advisory level, the way they will mark you, first you have to talk about in general, what's the requirement of the standard. Then you have to apply to the scenario, so that when you be advising, you are going to advise based on a scenario. Therefore, at this level, they can't simply give you the general responses. You are expected to be given a scenario, then from there, as you'll be answering, you must ensure to refer to the scenario. Question 4, December 2022. Number 1, most cadets did not explain that the grant would be an equity settled transaction. Okay, so most cadets did not explain that the grant would be an equity settled transaction, with the consequence that the cost of the service would be measured based on the fair value of the grant debt. I'm sure before you can go for the exam, you will come across IFRS 2 on share-based payment. We have got 3 types: equity settled and cash settled, and where there's a choice. For equity settled, always at the inception, we measure at the fair value of the goods or services received. If it cannot be measured reliably, then you can use the fair value of the equity instrument at grant date. So grant date, very, very important. In part A of 2, most cadets did not explain that the grant would be cash settled transaction, with the consequences that the cost of the service would be remeasured based on the fair value of the reporting date as an estimate of the cash payable. So when you are accounting for cash settled share-based payment, at each reporting date, you have to remeasure the fair value. And if there will be a gain or loss, you report in profit or loss. So whenever you are answering a question on share-based payment, it's a friendly standard. What are the key areas? 1, whenever they give you a scenario, you must identify the type of the share-based payment. Secondly, you have to know what was acquired. Is it goods or services? So that you can know the appropriate accounting and the double entry. Then you have to know, are you in year 1 or are you in year 2? So I would advise you to ensure that you revised share-based payment. It's very friendly accounting standards. Failure to compute the number of employees estimated to qualify. Take note, as I've indicated, they may give you a vesting period of 4 years. In year 1, 2 directors left the organization. Then the company is expecting further 3. So you have to add those who have left and those who are expected to leave. I'll try to clarify when I give one practical illustration. The last question of 5 for December 2022. The comments on the performance and position was made in the form of a trend analysis without reference to the business factors. I think I highlighted this one. At this level, you are not only supposed to compute, you have to advise, and in this case, you make a recommendation. Now, when you are recommending or making a comment, you must also refer to the scenario. That's what was tested here. Question 1, March 2023. It was also on a cash flow. Subtracted, reversed net actuarial loss on the defined benefit plan, which was reported in other comprehensive income. If you have been following this presentation, also I highlighted on this one. So take note, when you are reversing the item, we reverse the items which were reported in profit or loss, not other comprehensive income, because we are going to start with the profit before tax. Actual gains are reported in other comprehensive income. Deducted net retirement benefit expense as cash outflow instead of contributions. Take note, in profit or loss, you may account for the current service cost, past service cost, net interest, gain or loss on settlement. Those are expense. When you are preparing income statement, we use accruals concept. But when you are preparing statement of cash flow, we use a cash basis. So the only cash is a contribution. The common example I give, let's assume we work for company Z. When they take contribution or check to NAPSA, that's a cash outflow. Now, the common mistake is to show benefits paid. Take note, if IS 19 will be tested in the exam, it will be funded. When you say funded, basically we are referring to where the entity has got a planned asset and planned obligation. So when they pay benefits, they collect accounting treatment, you have to debit the planned obligation, then you create a planned asset. Unfortunately, most students show benefit paid as a cash outflow instead of contribution. I wish to remind you, if cash flow will come at this level, expect there will be employee benefit. The expense which will be reported in profit or loss, ensure that you reverse them by adding them back. Then the contribution is what will be outflow. Benefit paid should not affect your cash flow. Some cadets started with a profit after tax, but failed to adjust the tax expense. So when you are answering cash flow, you are encouraged to start with a profit before tax, but it will depend the way the examiner will present information. If the examiner won't give you PBT, will give you profit after tax, then you have to adjust for the tax by adding back, assuming it's a tax expense, in order to come up with the profit before tax. Added share of the associate profit. As I've indicated, when you are using indirect method and you start with the PBT will be taken from the profit or loss. And when the profit or loss was prepared, it was prepared based on accruals basis. But when you are preparing cash flow, we use the cash basis. So if there was a share of the profit from the associate, which was taken as an income in the profit or loss, as a credit, so it means it increased the profit. So what are we saying in this case? If there will be a profit, to reverse, you subtract. Fail to reconcile the finance cost in order to determine the interest paid. In the income statement, what will be shown is the interest expense. So you have to come up with the interest which was paid. I'm sure after this presentation, I'm expecting you to go and check March 2023, question 1, then you understand what I'm referring to there. Swap the balances brought forward and balances carried forward. This one I've already highlighted that one. For future examination, assuming you come across the cash flow, you are advised to use narrative if you are not comfortable with a ledger or the T account. As I've indicated, from my past interaction, students are not comfortable with a double entry. But if you have to be a good accountant, double entry is the foundation of account. So instead of writing opening balance on the credit side of our assets, I would advise you to use a narrative. Then of course you can even combine. Some working you can use the narrative, others you can use a T account. Misclassification of cash flow item. At this level, you must know the format, and normally it carries 2 marks. So you lose 3 marks by misclassification of expenses. Question 2, March 2023. Cadets still have very poor grasping of technical issues. So in simple terms, we are encouraging you to know the accounting standards. It's an advisory level, therefore you must know accounting standards. Question 1 will be on consolidation. The last question normally, it involves ratios and non-financial reporting. The other question 2, 3, and 4 will be on accounting standards. So take time. Before you enter for the exam, ensure that you understand the accounting standards. Few cadets wrongly advise that omitted depreciation charge in the prior year could be charged to the current year, together with the current year depreciation. So what was tested here The accountant did not charge depreciation for the previous year. So what he did is to charge the depreciation for 2 years in the current financial year. That is wrong. You agree with me that when you are communicating the performance is only we account for income and expense for 1 year. Therefore, the depreciation which was not accounted for in the previous year should have been accounted for under IAS 8, should have been adjusted retrospectively. That's what was tested. Apart from this, what was tested, this was a complex asset which we are supposed to separate and depreciate accordingly. Question 3, March 2023. This was on financial instrument, and specifically what was tested was fair value through other comprehensive income as an asset. Of course, few students managed to identify. However, a number of cadets commented as though it was a liability and mentioned interest expense to be taken to profit or loss instead of income. Whenever you are answering a question on financial instrument, you are encouraged to know, what are you having? Is it a financial asset or is it a financial liability? So in this case, those students who concluded that it was a financial liability rather than a financial asset, they lost marks. A number of cadets tended to write excessively on the qualitative characteristics of the financial statement, although this was not the primary emphasis of the question. Cadets, however, could not state the impact on the users of each aspect of the matters. So basically, as we are answering theory question, you must also take into account the marks available. Mostly, for Zika exams, most for every valid question or for every valid point, you are given 1 mark. So you may find that the question has got only 5 marks, but student will write 2 pages. It will cost you in terms of management. So please be advised, as we be answering theory question, you must take into account the marks available. Question 4, March 2023. It was on IASC 23. What comments came from the markers? While cadets were able to discuss the rationale for IAS 23 and suggesting both the recognition and measurement criteria for the borrowing cost, marks were lost for failure to accurately compute the base figure and the borrowing cost figure to be reported in the financial statement. So take note, as I've indicated at this level, they can't simply ask you, when should you commence capitalization? Define a qualifying asset. They will give you a scenario, then you have to apply a scenario to the question to be given. Question 5, March 2023. I'm sure this is the common mistakes which were exhibited by students. Question 5, March 2023. Cadets tended to mention the nature of instrument and not the impact of the profit in terms of paying interest and the effect on earnings per share. So basically here, what was tested here, you were supposed to advise the director if they want to raise the funds, should they raise through issuing equity shares or by getting a loan? So they wanted you to advise on the impact, but students simply commented what is a liability, what is equity. A good number of students who attempted this question mentioned generally that the convertible loan would be split between equity component and the liability. This one, I'm sure, this is what you learned in financial reporting. At this level, what was tested is what will be the impact. The key thing you have to realize, when you have got liability and you are charging interest will be reported in profit or loss. However, if you are going to issue finances through equity, when you are paying dividends, those dividends are reported in the statement of changes in equity. Finally, they were, however, did not describe the initial measurement and subsequent measurement. So basically, they wanted you to come up with the initial value, then from there, subsequent measurement by using the amortized cost. So those were highlighted in terms of the past common mistakes, and you are advised to ensure that you download from the Zika website. These documents are available. If you don't have, you can contact Zika or you can contact me. I'll be able to email to you. We come to number 5 of our presentation. I'll simply try to highlight what we are expected or what we are tested, because these questions are variable. So after this presentation, what I'm expecting, you have to go and download the question, then you answer. So basically, it's just an extract, it's just a part of the question. So before you can go to the actual questions, practical examination questions. Question 1. Always question 1 will be on group or consolidated financial statement, whether you like it or not. And there are 4 areas which are tested. The first area, multi-company, where you may have a complex or D-shaped, where you may have a subsidiary, or you may have 2 subsidiaries, where there's a direct control or indirect control. If you check, it came December 2022, March 2022, and June 2018. The next area, changes in the composition of the group. Changes in group structure. This is the technical area which you are advised to spend quality time. In terms of acquisition and disposal, change can come because of acquisition or because of disposal. The good question you can revise is September 2022. It tested on the changes in group structure. Foreign operation. Basically here is where you may have 2 subsidiaries, then the second subsidiary is a foreign subsidiary. So this was tested in March 2020. So the requirement here, before you can consolidate, we use ATC. What's the meaning of ATC? Adjust in the foreign currency. After adjust, you translate. Let's assume we'll be given Zimbabwean dollar or a US dollar. You have to translate. After you translate, then you consolidate. The last part of the question 1, which may be tested, is group cash flow. Take note, at advanced financial reporting, you are not going to be tested a cash flow for a single entity for a company. You're not going to be tested for a cash flow for Dangote as a company, but for the group or another group. So take note, at this level, what will come is a group cash flow, and you can check June 2022 and March 2023. When you are answering group accounts, group account is what will make you pass, because it will be 40 marks. And if you get 20 and above, then you pass the exam. So what are the key areas? Very, very important. That's why sometimes we wonder, how can one get half mark in the exam or 1%? Then you blame Zika that he brought a difficult or tough question. Whether you like it or not, for every entry, you'll be given half mark. So whether you like it or not, there will be a parent, there will be a subsidiary. You simply add the assets and liability. If the parent is 20, subsidiary is 10, you simply add, you show the figures, then you have got 1 mark. Based on the above, what's the meaning of that? For every entry you make, you'll be given half mark. Do not start with workings. I have noted students who start with workings, then they won't write anything in the financial statement. You lose marks, because working, it will require you to understand, to go through the scenario. But when you go to the financial statement, you simply add. Go straight to what the question is asking for. So if they are going to ask, prepare consolidated statement of profit or loss and other comprehensive income, immediately you write the consolidated, the format, and immediately you pick the figures for the parent. Because whether you like it or not, the figures for the parent will be there, and for every entry, you'll be given half mark. After that, then you consolidate. But take note, when you are consolidating income statement, you must ensure that you only account for income and expenses with outside that. Any intragroup income and expense, those should be eliminated. Then also take note, if income statement will come, they may give you a subsidiary which was acquired or at the post period is less than 1 year. So in that case now, income and expense must be time apportioned, unless the examiner will indicate otherwise. Short workings can be done within the consolidated financial statement. Sometimes you find a student have written 20 workings. It will cost you in terms of time management. If normally adjustment are 2, you are encouraged to do it within the consolidated financial statement. Please, my humble appeal, no proportionate consolidation. How do we consolidate a subsidiary? We use full consolidation. The meaning, you simply aggregate the results together. If it's 80%, you are not supposed to multiply 80% of asset and liability of subsidiary. Then if you be an associate, like if you check the exam for June 2023, initially there was a subsidiary, then at the end, it was an associate after disposal because they lost control. So there we are supposed to use equity accounting. Unfortunately, most students, they also timed apportion their asset and liability. So when you are preparing statement of financial position, you must only consider the position at the year end. Is it an associate? Is it a subsidiary? If it's a subsidiary, use full consolidation. Associate, use equity accounting. IFRS 3, whether you like it or not, it will be there in the exam. What are some of the key areas? Acquisition cost always must be expensed. In the past, the standard used to allow to capitalize. Even if you can check the last sitting for June 2023, they tested in terms of acquisition cost, which were capitalized, which were supposed to be reversed. Assets and liability, please never time apportion. What's the meaning of that? If the subsidiary you add it for 6 months, the common mistake is you get assets and liability, then you multiply by 6/12 or 9/12. This is not expected. It's a grave error at this level. So please take note. Only time apportion, income and expense, and also equity in terms of if there will be a post movement, maybe in terms of retained earning or other reserves. New item which were not recognized may now be recognized based on IFRS 3. The common item which you may come across in the exam, contingent liability. I'm sure you know, according to IAS 37, contingent liability is simply disclosed. But when you come to IFRS 3, provided the fair value can be determined, you have to recognize. So you are going to see here, there is a contradiction between IAS 37, which is on provision, and IFRS 3. Now take note, question 1, what they will test you mostly is IFRS 3, not IAS 37, which is on provision. So if there were any contingent liability, we need now to recognize, provided the fair value can be determined. Further, internally developed intangible asset, according to IAS 38, which is on intangible assets, some intangible asset maybe were not recognized, but you need to recognize. Further, maybe there were deferred tax, which were not recognized because it was not probable that the entity who receive economic benefit may end up being recognized. What have we been advised for future exams? Always, IFRS 3 will be there in the exam. Ensure that what are some of the items which were not recognized, which you need now to recognize. So ensure to spend the quality time in terms of revising IFRS 3. As I've indicated, because of limited time, I'll simply show you an extract. Then what I'm expecting, you have to download, like in this case, the first example is March 2022, question 1. So you are advised to download as you'll be listening to this recording. So like the way if you check here, there were 3 companies. There was Lusaka, Ndola, Mansa. Always the first company is a parent company. Then Ndola, Mansa, it will depend. But in this case, it was a D-shaped. So Mansa was a sub-subsidiary. Now, what are you expecting? If the question will come like this. So if you come, always go to the requirement. If you go to the requirement, required, prepare Lusaka Group consolidated financial position as at 31st March 2022. How many marks were available? 40 marks. So immediately you go and write a pro forma. So you start consolidated statement of financial position. Then immediately you start picking the figures for the parent company, Lusaka. So you pick property, plant and equipment, 720. Investment property, you pick. Investment in subsidiary, that's one will be the what? Will be replaced by goodwill. You pick financial asset. From there, you go to current asset. For the parent, you pick 447.7. Share capital. please always pick a share capital of the parent, in this case 875. Now the common mistake is where you add also the share capital of the subsidiary. You add 605 and 400. Please only account for the share capital. From there, when you come to retained earning and other component of equity, here you are expecting to come up with the working. How do we consolidate equity? For the parent, after your adjustment, you get 100%. Then for the subsidiary, you get a share of the post. So if the share is 60%, you give the parent, then the other 40% you give the NCI. Then there's a current habit. So once you establish a structure and you identify in dollar and the months are also a subsidiary, immediately you add figures. So take note, I'm not expecting anyone to get below 15 marks because why? For every correct entry is half mark. After you get these marks, we call them low-hanging marks or free marks. Then you go to the notes. So I'll just try to highlight 2 notes, then we'll proceed. Additional information. On 1st April 2020, Lusaka acquired 14% of equity shares in Mansa for a cash consideration of $130 and in dollar 70%. So in 2020, Lusaka acquired 14% of shares in Mansa. So based on the percentage of ownership, we're expecting Mansa to be accounted for as other investment or equity investment. Because you can only have significant influence where you have got above 20% and consolidation, a subsidiary where you have got above 50%. Of course, you have to take into account other information. So what was tested here, in 2020, Mansa will be accounted for under IFRS 9, then in dollar will be accounted for under IFRS 10. There will be full consolidation. Then at 1st April 2020, the identifiable net asset of Mansa, the fair value was 485 million, retained earning 95, and other component 26. So take note, at this point in April 2020, you can't compute goodwill in Mansa because it's not a subsidiary. You continue with the notes. On 1st April 2021, Lusaka acquired 60%. So when should Lusaka start consolidating Mansa in using full consolidation in 2021? Because in 2021, that's when now Lusaka crossed the accounting boundary. Now the key area is, what is the ownership of Lusaka in Mansa? So what we expected is this, what we refer to as a D-shaped there. So you can see there, Lusaka acquired 60%, when 2021, then in dollar, between dollar and Mansa, it was 2020, 1% there, we are getting 70%. Then you can see there was a direct ownership of 14%. So in this case now, when you want to compute the effective interest, what were you supposed to do? To get the effective interest in Mansa, you were supposed to multiply 60% times 70%. That is the ownership through dollar. Then you add 14%. So when you come up with the effective interest now, you use it when you come to share the post-retained earning and also the other balance you give to the non-controlling interest. We continue. Only the cost of investment comprised 625. Then on 1st April 21, the fair value were as follows. So basically what was tested in this question is, to summarize, we are supposed to compute goodwill in 2021 in respect of Mansa, because that's the time when they had acquired the control. Before, it was accounted for under IFRS 9. The other important things. So under D-shaped, there are 3 important areas which will be tested if you come across it in the exam. 1, the date of control from point of view as the ultimate parent company. So like in this case, Lusaka will start consolidating Mansa in 2021. That's the time you should even compute goodwill and fair value adjustment. The next important point, you have to compute the effective interest, the holding of Lusaka in Mansa, by multiplying 60% times 70%, then you add 14%. Then when you come to the cost of investment, which in dollar paid in Mansa, take note, part of the investment which in dollar will pay when you're acquiring investment in Mansa will come from non-controlling interest. So this should be shared between the parent and non-controlling interest. This is a good question which I would encourage all of you, if you are preparing for future exams, to revise. Then you are going to appreciate what was tested. And once you get a correct structure, then it will be very easy. So if you check, that's the suggested answer which you have, and you can agree. What we are trying to advise here is that each entry you have to show, like if you go to property, plant and equipment, by writing 720, which is from the parent, 550, 650, it's half mark. Then those adjustments will carry additional marks. So you can even pass by simply getting the results of the parent, subsidiary, and sub-subsidiary. Then if you go to the share capital, only pick for the parent. Now the key thing is in terms of marking key. I want to advise you. So this is what. So if you come here, the group structure, how many marks were available? 1 mark. If you go to property and plant and equipment, how many marks are there? 3. Now let's see. How did they come up with those 3 marks? So if you count for property, plant and equipment, if you count 720, 550, 650, 17.5, 20, and 16.3, there are 6 entries. So for each entry is half mark. Therefore, capitalize. What I always encourage my student, or what I can encourage you, enter as many entries as possible. It will give you added advantage. The next one, if you check there, share capital is only the half mark. Why half mark? Because you only pick for the parent. When you go to retained earnings, how many marks were available? 7 marks. So I'm sure you can use this marking key or guide to know how you are supposed to answer in the exam. Another example, September 2022, question 3, note 2. As I've indicated, is simply an extract. So what I'm expecting, you have to download and answer the entire question. Let's go through. On first, now, always start with the requirement. Why should you start with the requirement? 3 important. 1, you have to identify when you are reporting. Is it after 1 year? Is it after 6 months? Apart from that, who is the reporting entity? Then also you have to identify the appropriate standard. So go to the requirement. What's the required? Using the information in note 2. So they are not saying use the general information. Go through note 2. Explain. So the command is explain, not to compute. So if you simply compute, you are going to see when I show you the suggested marking key, you lose marks. So required, using the information note 2, explain and show how the event will be reported in the financial statement of Zika Munove for the year ended 31st March 2023. So what are the key areas you must pick here? When are we preparing? 31st March 2023. So you have to start counting from when the transaction had taken place, so that you know whether it's 1 year or 2 months. Apart from that, we are reporting for Zika Munove. Then what else? What have we been recommended? Not to compute, but to explain. So after going through the requirement, now I'll go through a scenario. On 1st April 2022, so from April 2022 to 31st March 2023, it's 1 year. So when you be preparing financial statement, you have to take into account that it's 1 year. Zika Munove purchased a machine from a foreign supplier based in Zimbabwe. The cost of the machine was 900 Zimbabwean dollar. Now take note here, we prepare in kwacha, but the presentation currency or the asset was acquired in dollar. So what were you expecting is to translate from Zimbabwean dollar to kwacha. Now you have to pay particular attention when you are translating. Are you supposed to multiply or divide? We continue with the scenario. Zika Munove paid this amount to the supplier on 3rd June 2022. So you are going to see they acquired on credit, then part of it was paid on 30 June 2022, so it means there will be issue of exchange difference on settlement. The estimated useful life of the machine on 1st April was 8 years. However, the machine contained a component which need replacing after 4 years. So what was tested here is on complex asset. Part of the component will be depreciated for how many years? For 8 years. Part of the component will be depreciated for 4 years. On 1st April 2022, the directors of Zika Munove estimated that 30% of original cost of the machine was attributable to this component. So we are saying out of the total cost, you multiply by 30%. That one, you are going to depreciate it over 4 years. Then the balance, you depreciate it for 8 years. Now, what was interesting here? We have been given the exchange rate. Of course, there's a date, then exchange rate. Zimbabwean dollar to kwacha. So if you come on 1st April, 3 is not kwacha, it's Zimbabwean dollar. So it means 3 Zimbabwean dollar is equivalent to 1 kwacha. Now, let's translate. We are moving from Zimbabwean dollar to kwacha. So you have to know, are we supposed to multiply? Are we supposed to divide? What I always advise a student, you have to know which one is a strong currency. Like in this case, do we need to have more kwacha or do we have to have less dollar? So in this case, the interpretation is for 3 Zimbabwean dollar is equivalent to 1 kwacha. So since we have got 900 Zimbabwean dollar, if you want to come up with kwacha, instead of multiply, you divide. And you are going to see, if you check the examiner's comment, most students lost marks. Why? Because they multiplied. Then after that, then you were supposed to prepare the extracts. So what was tested here was on complex asset, which we are supposed to split. So if you check there, if you check the suggested answers, these are available on Zika website. So I am expecting you can check. The cost happened on 1st April. Then now take note, they haven't said compute is explained. So we are supposed to indicate it to be recognized. Then initially translated 900 divided by 3, 300 kwacha. Apart from that, you indicate it was settled on 30th June. Then use the exchange rate. Remember, when you have got a liability, a monetary item, you keep on retranslating. Then machinery is a non-monetary item. And when you are using cost model, we only translate initially. Subsequently, we simply depreciate. Then the next point, which I have pointed out, we are supposed to split into 2 components. How are you supposed to split? 30% you depreciate over 4 years, then the balance we depreciate over 8 years. That's why you are seeing 1/8 and 1/4. Now, my main interest is the marking key there. Check the marking key. Half mark for each correct computation. So by simply writing 9 half mark divided by 3 half mark, also where you are going to show 8, 30% is half mark. And 1 mark for each valid comment. So when they are marking, that's what will guide the marker. For every computation where there's a valid computation, they will give you half mark. Then if there's a comment, you get 1 mark. So if you are only going to compute without comment, because if you go to the requirement, what are you required to do is to explain, not to compute, you lose marks. So this is very, very important. I have decided to include the marking key to guide you for future exams. Another question, March 2022, question 2, number C. Also, it's an extract. So what am I expecting? You have to go and download the actual question. Required, discuss the main principles of fair value measurement set out in IFRS 13. So discuss. So when you are answering this question, you have to define what is a fair value, the price you can receive to sell an asset or pay to transfer a liability in an orderly transaction between market participant at measurement date. Then you identify the types of market, the principal market, the most advantageous market, and the active market. Then you have to know that it uses what we call market-based, not entity-based. So it's the entity which will determine the fair value. This is very, very important. And it uses what we call exit price, not entry price, at a time when you'll be selling an asset, when you'll be transferring a liability, not when you'll be buying an asset or getting a liability. Very, very important. So the marks which were available, 5 marks. The second requirement described the 3 level I like for fair value measurement. The common mistake is where you simply say level 1, level 2, level 3. Basically, you are supposed to describe. Marking key, 1 mark for each valid comment, not listing. At this level, take note, you are not expected the examiner to command you to list, is to explain. So any valid point, you'll be given half mark. Of course, those are suggested answers which are available on your website. You can go through. So what you can try to attempt, then you can go through the suggested answers. What I was interested is for every correct entry is half mark. Let's also another extract. March 2022, question 4A. Always start with a requirement in each of the scenarios. So in this case, before you can answer, you have to go through the scenario, calculate the amount of revenue to be recognized in the financial statement of Zamtua Limited for the year ended March 2021, and explain the appropriate accounting treatment in accordance with IFRS 15. Very, very important. So when you go through the scenario, you must come up how much revenue will be recognized. Don't simply say the revenue is 20. You have to explain. And when year ended March 2021, and the way you'll be explaining or advise, not according to what you think, but according to IFRS 15, which is the standard on revenue from contact with customers. Briefly, let me go through a scenario. Question 4A, number 1, of course, this came for March 2022. On 31st March 2021, so immediately you come across the date, so on 31st March 2021, and when are you advising? On 31st March 2021. But you'll be surprised in the exam, the student will be commenting after 2 years or 3 years. So we are on the same date. So on 31st March 2021, Zamtua signed a contract to supply 50,000 units of the food packs at an agreed price of 100 kwacha per unit. So on this date, they simply agreed that they are going to provide 50,000 units, and for each unit, 100. Then on the same day, when they signed, 30 units were delivered. So basically what was tested there, when do we recognize revenue? We recognize revenue when performance obligation has been satisfied. When you have delivered. So out of 50,000 units, you were only supposed to recognize 11 for 30,000 units, because the other 20,000 units have not yet been delivered. Take note of that. So that's what was tested. But further, let's continue. It was agreed that the customer would have extended credit terms of 12 months from the date of delivery. Zamtua Limited cost of capital is 10%. What's the meaning here? The items were delivered on 31st March 2021, but the company is going to receive cash in 12 months' time. So because of the time value, when you are recognizing revenue, you have to discount. That's why I've been given 10%, you have to discount. And when you discount, then you come up with the present value. When you recognize the present value, then subsequently, you start charging interest. So there were two areas which were tested on this question 4A, number 1, only recognized revenue for 30 units because 20 units were not delivered. Then since the cash was not received immediately, the cash will be received in future 12 months, and the time value is material, you were supposed to discount. Very interesting. Part 2, during the year ended 31st March 2021, Zamtua received a payment in advance for the supply of 2,000 hotel room nights to customer at 1,000 per room per night. So here is where a customer is paid in advance for how many rooms? 2,000. And they paid immediately. So what is being tested here? Should we recognize the revenue immediately? Here it has been tested from point of view as an hotel, where a customer is paid in advance. Why the customer is paid in advance? Is for you to provide a service. But if you have not yet provided a service, should we recognize revenue? No. So we continue. Only 400 of these have been occupied by 31st March 2021. Customers are entitled to occupy the remaining 1,000 room nights within the next 6 months. The amounts paid by the customer are non-refundable unless the company fails to provide the agreed accommodation. So what was tested here? the customer paid for 2,000 hotel room nights, but only provided 400. So what should be recognized is only for 400. The balance should be deferred, should be shown as a liability. So basically, what was tested, you can't recognize revenue before you provide the service. So if you go through, this is a suggested answer, which is available on Zika website, which you can go through. Of course, they're saying by signing a contract, you can't recognize revenue because contract has not been transferred. The performance obligation has not been satisfied. So you're only supposed to recognize for 30. Apart from that, yes, the customer didn't pay. The customer will pay in future. But when you go to IFRS 15, you must not wait until the customer pay. You have to recognize immediately. The only thing which was tested, since the customer is not paying now, the customer will pay in future. You are supposed to discount using 10%. So that's why when you multiply 30,000 times 100, then 0.909 is a discounting factor. So the revenue which should have been recognized is 2.727. So very important. Go to a marking key. I'm interested in a marking key. Half mark for each correct computation. So by simply getting 3,000, half mark, 100, half mark, discounting factor there, 1 mark. Then 1 mark for valid comment. So the way you lose marks in the exam, you simply compute. You find that the marks, like in this case, you find there were only maybe 2 marks for computation. The rest is the valid comment. Also, this is an extract of suggested answer, which you can check on Zika website. The key thing again, what was tested here, the customer paid, but the entity or the hotel did not provide a service. So for that one, was supposed to be deferred. So the entry which should have been passed is the total amount which they received, which was 2 million to debit cash at bank, then credit revenue, 400 for what they provided, then the balance, which is 16 to be deferred. Again, when you go to the marking key, very, very important, half mark for each correct computation and 1 mark for a valid comment. So you can agree with me that at advisory level, if you be the expert of only computation or quantitative, then you are not going to pass the exam. December 2022, question 4, number B, note 2. So this is an extract. So for you to appreciate, ensure that you download the question. Note 2, granting of share appreciation right to the senior executive. So this is on IFRS 2 share-based payment. Then share appreciation is where the company is going to pay based on by how much the share is going to appreciate. So this is an example of the cash settled share-based payment. So when you're answering like this question, you have to take into account. Before I forget, always start with the requirement. Required. Briefly explain and show how the transaction described in note 2 would be reported in financial statement of ZAM share for the year ended 31st March 23. They haven't said compute, explain and show, come up with the figures. Then which financial year? 31st March 2023. Now you are going to see why it's important. So when did they enter into transaction? They entered on 1st October 2021. And when are you preparing? 31st March. So it's very, very important you take into account. So basically this question was on the share-based payment, specifically cash settled, which is a share appreciation right, by where the company will pay based by how much the shares will appreciate. Now let's go through a scenario. During the year ended 31st March 2023, now before that, let's go on top. On 1st October 2021, ZAM share granted 500 share appreciation rights to 20 senior executive members. So 500, then how many directors? There were 20. The rights are redeemable in cash on 30th September 2025, provided, that was a vesting condition, executives remain in employed by ZAM share until at least 3rd September 2025. On 1st October 2021, ZAM share estimated that 2 of the 20 executives would leave in the period. So, in short, what am I trying to establish here? How many directors should we provide for? Because there are 20 directors. So before the vesting period, before it matures, we will simply estimate. So let's go for during the year ended March 2023, one executive left. Before that, now take note, when are we preparing? March 2023. Then when did we enter into the contract? 1st October 2021. Then the financial year end of this company is 31st March. So it means the first reporting period was on 31st March 2022. So in this case, when you come to 2023, we are in the second period. So when you will come to amount, first you have to determine how much will be reported in the financial position. Then the movement is what will be reported in equity. So this is a good question. You can revise if you want to understand the share-based payment, specifically cash settled. So this is a suggested answer, simply an extract. You can get the full solution from Zika website. So if you check there, you have simply guided there that we are preparing on 31st March 2023. And there, they have come up with the number of directors, then the double entry, being a cash settled, it will go to liability, and each year will be expensing. Then the next one was the June 2022, question 2, transaction 1. It was on IAS 19. Basically, this was on defined benefit. So always start with the requirement, explain to the directors how the above transaction must be accounted for financial statement for the year ended December 2022, including the deferred tax. So you are going to see in this case, apart from applying IAS 19, you must also bring the principles of deferred tax. But in most cases, you find student only account for IAS 19, and then they'll forget IAS 12 or deferred tax. Deferred tax is highly examined. So if you go up, basically they are saying, according to the pension scheme agreement, Kapunda periodically contribute 10% of the employee's basic salary as employee pension contribution to a separate pension fund. So basically they have got a fund manager where they are taking the contribution. Then upon retirement, employees are entitled to the lump sum payment computed as a final salary multiplied by 2% for each year served. So this an indication is a defined benefit. So what were you supposed to do here? You were supposed to come up with the extract where I've got a planned asset and planned obligation. So if you check here, we're in 2022. So it means the closing balance for 2021 will be the opening balance for 2022. Okay, then when you continue there, they are saying additional pension earned by the plan members for the service rendered during December 2022 amounted for 5.5. So that is the current service cost, which must be expensed in profit or loss, and you increase the liability. The next one, which was very important, yield to maturity on high-class corporate bonds with the same term of maturity as Kaponda's pension plan liability, where 10% and 8% at 31st December 2021 and December 2022 respectively. So basically, those are the tax rates to use when you are computing the interest income on an asset and interest expense on a liability. Now, for tax purposes, tax relief for the cost of providing employee is liable to income tax at 35%. When you are applying IAS 19, we are going to use accruals concept. So as the employees be providing the services, even if the entity has not given them benefit, they have to be accruing them. So they will be expensing and showing it as a liability. But for the tax purposes, the tax man will only allow us an expense when there's a payment. So it means there will be a temporal difference. And in this case, will be a deductible temporal difference because the employees, as they'll be providing the service, the employer will be accounting for the expense, which will be derecognized, will be disallowed by the tax authority. So this what was tested. You are supposed to indicate the deductible temporal difference, then you multiply by 35%, then you have got a deferred tax asset. So I'm sure you can check there how it was presented in terms of computation. Deferred tax implication, so that's the meaning here. I'm sure you know IAS 12, highly examined. When we talk about a deferred tax, is a tax on temporal difference, and this difference comes because of the accounting rules are different from the tax rules. So to come up with the accounting base, use accounting standard. So like here, use IAS 19, then the tax base, use the Income Tax Act, or you'll be guided. Like here, you have been told, they will allow it as a deduction in future. So that's why the tax base we are seeing there is 0. Then you have got a temporal difference, then you have got a deductible. So you multiply, then you have got a deferred tax asset. March 2023, question 2A. Always start with the requirement. Explain to your assistant how the above technical issues must be accounted for in the financial statement of Zika Munove for the year ended 30th September 2022. So I'll simply go through one technical issue, others we can find time to go through. Okay, so this is in March 2023, question 2A. On 1st October 2021, so when are we preparing? September 2022, after 1 year. Very, very important to know the command you are explaining. Who is the reporting entity? Zika Munove. When are you reporting? September 2022. On 1st October 2021, we lent 2 million to the customer in order to assist them with their expansion plans. So Zika Munove gave 2 million to a customer. The loan cost us 100,000 to arrange. So I guess we need to charge 100,000 as an expense for the current year. We agreed not to charge interest on this loan to help our customers' short-term cash flow. So basically, our customer were having some challenges. Then so okay, for now you only pay everything at the end. Okay, so we agreed to charge. No, we agreed not. Take note, not to charge interest on this loan to help the customer short-term cash flows, but expected the customer to repay us 2.4. So basically, we gave the customer 2 million, then the transaction cost was 1 million, then the customer is going to give us back 2.4 million. When are they going to give us? September 2023. And when are we reporting? September 2022. This will mean we cannot take any profit this year, but there will be nice bonus next year when we receive repayment. I was told by the finance department that the effective annual interest, this loan is 6.9%. I don't understand the relevance of this information. So basically, they wanted you to advise. So basically, this was on the financial instruments. I examined IFRS 9. And what was tested when you lend a loan, it's a financial asset. And I'm sure you know that there are 3 classifications. For a financial asset, which is a debt, you can use amortized cost, fair value through profit or loss, fair value through other comprehensive income. So if you can go through here, it qualifies that you can use amortized cost. Why? Because it's held for maturity for investing and the contractual cash flow is specified. So in this case, you can use amortized cost. After you classify, then talk about initial measurement. Surprisingly, you find a student start commenting the accounting treatment on 3rd September 2022. You have to be methodical as you are answering. Start with October 2021, then you can talk about 3rd September 2022. So in this case, how do we handle transaction cost? When you have got a financial asset measured at amortized cost, we capitalize transaction cost. So what we're expecting, the initial value of the asset should have been 2.1. Then thereafter, you amortize. Amortize simply means you charge interest, in this case using 6.9%. Then the income will take to profit or loss. Then since it was not received, you add to the financial asset. So basically, you can go through suggested answer. The key thing, it was a financial asset. Then use amortized cost. Apart from that, we are supposed to capitalize the transaction cost. That's why you are getting 2.1. So by getting 2.1, you have got 1 mark. Then apart from that, you have to amortize. So you get the effective interest. By getting 2.1 times 6.1, they will give you 1 mark. Then you have got interest income, which will be taken to profit or loss and increase the financial asset. Marking key, guide, half mark for each correct computation. So it means wherever there's an entry, you are given half mark. Then 1 mark for the valid comment. When you are answering discursive questions, it's very important you identify the area of analysis or evaluation. Maybe you can be told in the exam, analyze the performance and position. So you must ensure that you balance the way you are commenting. Then the report, normally you say write a report or memo. You must ensure that you write a report format. By writing a report format, normally you'll be given 2 marks. Then as you're analyzing the ratios, you must understand which sector are you, and which ratios are you computing. Then the format must consider the report format. Then when you're writing a report, you must ensure that there's the introduction, then analysis, and conclusion. So basically, that's what you advise. Conclusion. One important thing you need to know is that the entire syllabus is examinable. You are not supposed to predict what will come in the exam. What must help you to predict what will come in the exam is the syllabus. Therefore, you should never specialize in few topics. On account of the trend of past papers, you are not the examiner. I've noted most students who try to analyze what came for the past 3 sittings, then they want to predict what will come in future. So take note, you are not the examiner. So you can't predict what will come in the exam. So what must guide you is the syllabus. If you specialize on certain topics, you are taking a very big risk. You should take note that the important area of the syllabus where students do not perform well are frequently re-examined. Whether you like it or not, every exam you find financial instrument. Why? Students normally, they don't perform well. You find deferred tax. You find IS-16 and mostly on subsequent measurement. Very important point, the 4th point, no marks are given for the totals or balancing. Sometimes you find students who spend time to try to balance computation. You are not given any mark. Marks are given for individual entries. So what are you advised? Ensure that you enter as many entries as possible. Do not do calculation in your head or on your calculator. If you check the front page of your question, it indicates that all computation must be shown in the answer booklet. So you are encouraged to ensure that you write all the workings, the relevant workings, as you'll be answering. Writing everything down to avoid losing marks. The marker is not there to think for you. Another important point, no negative marking. If you make a mistake, you won't be penalized. So make as much mistake as possible, you won't be penalized. What the examiner uses as their marking is follow through. The meaning here is, for instance, if you make an adjustment for depreciation which is wrong, then you come up with using the same long depreciation, then you come up with the carrying amount. The examiner won't penalize you. Ensure that you read the examiner's comment from the recent exams on the Zika website. I have simply highlighted some of the common mistakes. So what am I expecting? Ensure that you go through the examiner's comment, which you'll find on the Zika website. Cadets are advised not to take increase in the examination sittings for granted. From the time when Zika has introduced 4 sittings, what has been noted is students are rushing to write exams without preparing. So you are advised to ensure that you spend adequate time to prepare yourself before you can write exams. Personally, I don't encourage a student to write advanced financial reporting within 3 months, unless you want to donate to Zika. Cadets should ensure that they have completed the syllabus, revised, and worked through a series of questions before registering for examinations. For all the past exams, questions, and answers, you find them on the website. In terms of time management, you'll be given 3 hours, which if you translate in minutes, that's 180 minutes, and the marks is 100 marks. So what are you expecting? For every mark, you have to spend at least 1.8 minutes. Therefore, for a question which is 20 marks, section B, it carries 20 marks. You should not spend more than 36 minutes. In conclusion, good exam technique is not just about what you know, but how you apply your knowledge in the exam itself. So you may have knowledge, but if you are not going to apply the exam techniques, then you are going to fail the exam. It's my prayer and hope that this presentation may help in terms of enhancing the performance of Zika. As we have indicated, Zika is not the one who regulates a pass rate. Who regulates a pass rate is the student. Therefore, it's my prayer and hope that the next exam we are going to have, the pass rate will improve. So thank you very much for listening to this presentation, and I look forward for future interaction.